Hey students and friends from around the world, this is of course Jeremy Alexander Newsome with the third video in section 2, and I hope you're doing absolutely phenomenal. What we're doing and talking about in today's session, video and or class, regardless if you're watching this in the live class that I'm teaching or from YouTube or from Twitter or Facebook or one of the blogs or articles out there on the internet, this video has circulated the web many times for sure. And I appreciate your guys' support, truly. Thank you very much. But what we're talking about tonight are chart patterns. And as you guys know, one of my specialties is taking all the information, all the clutter that can be taught about a particular subject and giving you what you need. Because if I teach you 457,316 things and tell you this is what you need to learn how to trade, that would be, a little bit arrogant of me. Because truly, if you become the master at just one or two things and you focus on those one or two things and you get really good at just those one or two things, you really can master the market. So what I'm going to discuss today is kind of a bridge between the three phases. Do you guys remember the three phases of the market we talked about in the very first part of section 1? I apologize, the first video in section 2. And the phases, we talked about public participation, accumulation, and distribution in no particular order. And what we're going to talk about today are simply chart patterns. Now, all chart patterns are forms of consolidation. And depending on where it is in the market and how big it is, these patterns really could fit in either the accumulation, public participation, or distribution phases. And sometimes they can become, in and of themselves, distribution and or accumulation phases. So what we're going to discuss today are some of the most simple chart patterns that you can see. And we're going to be talking about the double top, double bottom, and we're going to be talking about the continuation patterns, the flag, the pinit, and the stair step. And hey, with those 5, you can really get a solid grasp on some information. Now, I might also sprinkle in a little bit of the triangles, but for the moment, we're going to be really focusing on those. So I have Caterpillar here, and let's just do some really quick review on Caterpillar. Since we talked about this in the first video of section 2, ladies and gentlemen, what phase of the market would this be down here on Caterpillar? And the answer is accumulation phase. Yes, accumulation phase. And in this accumulation phase actually is a type of chart pattern. It's called the channel. And a channel is simply when a stock is moving sideways between support and resistance. So you can see how it moves sideways and gyrates between support and resistance. That's what a channel is. And yes, each one of these opportunities gives us good buying opportunities. Okay. Now, when we're trading, what we're looking for is we're looking for the direction of the market and asking ourselves, what phase of the market are we in? For example, if we are in an accumulation phase, we're going to be looking to buy something. And if we're in some type of distribution phase, we're going to be looking to sell something or to go bearish. So looking at this particular trade, let's go into this accumulation phase down here. And let's find out if there are any locations in which we could actually buy the stock for make a profit. So I'm going to zoom in here on Caterpillar. I'm going to kind of scrunch up the chart here just a little bit. All right, give me one moment. There we go. I'll zoom in just a little bit more. All right, perfect. So let's come over here. Okay, so we've decided and discovered and talked about that this is a decent support level on Caterpillar. Now, the stock trade down to a support, and right here is where we get a very interesting chart pattern. A double bottom literally is exactly what it sounds like. It's a stock that bounces off of a support level 2 times. And the bounce can happen at the same location, a lower low or a higher low. And what I mean by that is it can look exactly like this. So there's one double bottom. This is what's taught in 99% of other education courses. You can also get something like this. Now, this is a little bit more rare, but it's kind of the leaning double bottom. And then you get one that looks like this. Which one, in your opinion, is the strongest? And in my opinion, it's actually the orange one, because the orange one makes a higher low, kind of like right about here. right? It makes a higher low. And what it really is, ladies and gentlemen, is buyers really, really eager to buy the stock as it approaches this particular support level. Now, a double bottom and double top patterns, they are pretty common. And you want a really good double bottom pattern to last anywhere between a week and 1 month. Any longer than that and any shorter than that, I would put an ish at the end. So double bottom ish type of pattern or double top ish type of patterns. They're okay, they're decent, but they're not phenomenal by any means. Now again, in this particular pattern, is this a double bottom? And the answer is yes, it is a double bottom. Where would you have entered? Well, honestly, in this particular one, the double bottom pattern, you enter with a close above the neckline. So the neckline is the highest point in the actual pattern itself. So in this situation, you would have waited for a close above the pink line, which means you would have gotten in approximately somewhere in this particular white candle. Now, depending on where your target was and where your stop was, the risk to reward might not have been that great. However, let's add one additional thing. What was the candle prior to the double bottom formation? And you guys are very, very familiar with this candle by now, hopefully. It's called the one white soldier. So here's one in green. Here's another one in green. Here's another one in green. There's one right here in green. And here's another one in green. So there's a lot of these patterns occurring at support. So what does that mean to you? Well, it means that you could have waited for a double bottom to close above the neckline, which would be the pink line. Or you could have taken it intraday. Because that's, how I mentioned you can take one white soldier patterns if the stock moves higher than the high of the one white soldier. So in this instance or scenario, you might have simply waited for an intraday price move above the pink line, which would have gotten you in a little bit earlier and made your risk reward a little bit better. Because in that situation, your stop at the absolute highest would have gone below the low of the one white soldier candle, and at the absolute lowest, probably here. Now, if you're really, really stretching it, you could have put in your low here in pink, but that's for a much, much longer term trade, right? That's for a trade that you plan on being in for a year or two, maybe even longer, right? One of the core trades that I mentioned in section 1. So you're going to be in that puppy for a little bit, for sure. So that really is a double bottom. I mean, it kind of is that simple. Here's another one, but you can see that it's quite large. And I'm not saying that there was no way we would have not have known that this would have worked. So here's the double bottom pattern right there. And here's the neckline, and you can see that it closed above the neckline. But notice the prior peaks, if you will. Okay, here's a peak. Here's a peak. Here's a peak. What's happening, ladies and gentlemen? Well, on Caterpillar at the time, we were actually making lower highs like that. So we were making lower highs. So this particular trade, you might have taken it or you might have exited a little bit early. I apologize for my terrible drawing. I'm actually using my trackpad for this because I forgot my mouse for tonight's class, but that's okay. So you guys get the idea, right? We're making a high, and another lower high right there. So that could have been a target. Or you might have simply said to yourself, you know what, based on this double bottom, I want to go bullish. But since the risk to reward is pretty pathetic, I'm not going to do anything. I'm going to wait. And maybe you went non-directionally bullish down here, which is a strategy and some strategies that I'll be teaching you in the mastery section of real life trading are some of the non-directional trades when it relates to options. So there's your double bottom. This one right here, you'd really have to squint to see it, but you can kind of draw it out. I mean, I have a little bit of a saying, draw the lines and the pattern you will find. I could dig that. It's no Mona Lisa, but your entry would have been right about there, and your stop would have been right about there. And your first target, more than likely, would have been right about there, which you'd have been very, very happy to sell there at that location for sure. Let's see if there's any other one. Some of you might say, hey, is this a double top? And honestly, I could say it almost is. The one thing I don't absolutely love about this trade is it is almost 2 months of time. So this right here is December, and this right here is end of January. so it is definitely an interesting pattern, and it did close below the neckline right there. So had you gotten into that trade, you might have taken some profit off the table, or whatever the case may be. But the fact remains is the next day was earnings. And as you guys will be familiar with, and some of my recommendations are to simply not trade over earnings until you know what you're doing, until you know how to protect yourself. So what I mean by not trading over earnings is truly do not hold specifically an option trade, but a stock trade over earnings without some type of protection. You can obviously trade the day of earnings if you would like to, but in regards to any additional trades, I would be really, really cautious about trading over earnings. So bottom line, if you took this double top, hopefully you got out or you exited before earnings for a small profit. So let's go see if we can find another double top. Same scenario right here. So this was another scenario where you have that peak, the second peak, which is much, much higher. But again, this is a very, very large double top. This one is in the span of about a month and a half, give or take almost 2 months. So it's a pretty large one. Now, again, had you taken this, you definitely would have closed below the neckline. But your risk to reward would not have been that great. Your stop would have probably been right about here somewhere. And to make that a really good risk reward ratio, you would have had to trade, maybe down to here to get a 1 to 2. So had you taken that trade, I could appreciate that. I could understand that. But here was a really, really good indication of when to get out. Okay. Let's say you maybe took that trade. I personally didn't. I was waiting because at the time, Caterpillar was very bullish. But you got a big black candle that closed below that price, okay? So let's say you got in bearish, and then you see this pattern, and it trades up, trades down, and you guys can see where I'm going with this. Here is what type of candlestick pattern, ladies and gentlemen. Go ahead and remind me because I forgot. Reminds me, yes. In this scenario, I would actually call that a new white soldier because it's not really at a support level. At this point, we are now in the trend. We're in the trend. So the trend is progressing strongly at this point. So likely you would have seen that one white soldier and said, oh man, this looks like it could be forming a double bottom pattern, which you guys can see it's much tighter, much quicker. And I do like that double bottom pattern. And that double bottom pattern, confirmed at some point. If you waited for a close above the neckline, you more than likely got in some point during this day right here. Maybe. It really depends on how you had your entry. But regardless, let's say you did get embarrassed there and your stop was right there. Did you mitigate your loss? And the answer is yes. You mitigated your loss successfully. Could you also have then flipped the switch and just simply have gone bullish with that double bottom pattern? And my answer to that would have been, yeah, I think you could have. Okay, so the stock trades up to some resistance. We get some reversal candles. We get a really, really strong gap, which we'll be talking about soon, actually, next class. And the stock gaps down and trades back to the same potential support level. And ladies and gentlemen, what type of reversal pattern do we form? Do you guys remember? This is a candlestick pattern. It is a reversal pattern. It does often say that the trend is going to kind of bounce at this point, oftentimes. Yes, morning star reversal pattern, absolutely. So your entry would have been approximately here, and your stop would have been right about there, and your target probably up in this resistance area somewhere. So really, really good resistance, really good trade based on the morning star reversal pattern on Caterpillar. Oops, I have no idea what just happened to my chart. Give me 1 second. Let's see if I can get it back. All right. Sorry, I really don't know what I did. I pressed a button. I'm still pressing it. Okay. I think it was this button right here. Don't press that button. All right. So, as you guys may remember in section 1, I mentioned the strength of the support, how much I liked it. So we had a support. Let's see if I can draw this line even remotely straight. So there was the support level right there, and I could go ahead and just kind of draw it for us. Horizontal line, boop, there we go. Now, how do I know that this was a horizontal line? Well, we can easily just look at it and simply see what happened and transpired on this particular stock. So we can notice that, right, the candle right there traded down, and we bounced right here. So that's 2 supports by itself. If we wanted to move it up a little bit higher to include the wick of this candle right there, we absolutely could have done so. We still would end up with a morning star reversal pattern. But regardless of where exactly you have the line, we can agree that we understand that this down here is some type of support level, right? Some type of support level. And we're looking at Caterpillar. Now, this candle right here is a one white soldier candle. And I was very, very bullish on Caterpillar, and I wanted to buy the bounce. My entry was here, and my stop was here at the red line. Ladies and gentlemen, did I get entered into that bullish trade, yes or no? And the answer is no, I did not, right? The trigger did not get hit. So right here, ladies and gentlemen, this is a fascinating question. Can you name name this type of candle? And if you said new black crow, you would be correct. It is a new black crow candle. It's a black candle that opens and closes below the prior day white candle's close. And then, I'll give you bonus points if you can get this one correct. What 4-day candle pattern is this right here outlined in pink? And the answer is rest after battle. But it's a bearish rest after battle. Yeah, because you have 2 white candles in the middle of 2 black candles. Now, even better yet, ladies and gentlemen, what would you call this particular candle right there? That candle is the new black crow. So if we continue any lower tomorrow in Caterpillar, my thought process is we will have some lower lows in the future on Caterpillar. So kind of keep your eyes out for that one. Even though I didn't really find an amazing, immaculate double top for this pattern. So let's go find one more, and then we will work on the continuation patterns. Verizon had a really nice double top not too long ago. Let's see if you guys can spot it. I'm going to give you a few seconds. All right. Here's what's very interesting. And again, at Real Life Trades, we're very open and honest about what we've done. I actually did call this a double top in 2013. And here it was right there. Double top, and it closed. Here's the neckline. It closed below the neckline, and I was making some really, really good money, and then I got stopped out right about here. Ladies and gentlemen, how much did I lose on that trade? Can you guys remind me? Remind me, how much did I lose on that particular trade? Because I did think that was a double top, yes, and it does look like a double top, yes, and it has many of the same characteristics as a double top. But I got stopped out, and I lost 1 risk unit, or 1 R on the trade. Exactly right. So the trade continued up higher, ended up reversing. We actually did get a new black crow right there on Verizon. Got a 1 black crow right there. And what type of candlestick pattern is this? The answer, 1 white soldier. What reversal candlestick pattern is this? Morning star reversal. You guys are getting it. What type of candlestick pattern is this? Now, this is a phenomenal entry. Guys, look at this. Man. So you have a support level, obviously, somewhere around here. So here's a resistance. So let's just go ahead and draw it on the screen. I'll come down here, boop, put it on the chart, and kind of coincide with this guy right here. Coincide with that line. So here was the resistance that I was keeping my eye on. You can see that the stock beat its head against this resistance for quite some time, about a month and so. And this was the breakout candle. Breakout! That was a candle that we went bullish, right? And the stock continued nicely at that particular point in time. Well, then we came back and retested it here, and then we got a phenomenal 1 white soldier, new white soldier candle pattern right here. So your entry there and your stop right there. How much would you have risked on that trade? You would have risked 1 R. We're on risk unit, same as all the time. So now at this point, the stock really starts going bananas, right? It's just screaming bullish. Then you get a pattern like this, like this, like this, and we start to go over. So ladies and gentlemen, which line on this particular pattern represents the neckline? Is it the red line or is it the pink line? It's best that I can draw those on my trackpad. And the answer is the pink line. Yes, it's the lowest low on that trade. So this right here would be indeed your neckline on the double top. I'm trying to draw this as straight as possible. There we go. Okay, and remember, you enter a double top with a close below the neckline. There's a close below the neckline. The next day, ladies and gentlemen, is simply a retest. Simply a retest. That's all it is, right? Very often will patterns retest the very, very next day. And why is that in this situation? Well, look how many black candles formed. 1, 2, 3, 4, 5. So 5 black candles in a row, which were all created from selling pressure. So the sellers of those days, right, that caused the stock to go down, the next day, when it made a lower low, were they profitable? The answer is yes. So what did they do? Well, they bought to cover, making the stock pop up a little bit. So stock pops up into the resistance, and then it continues even lower. So if this was your neckline right there, and let's say your entry is here in the green line, where would your stop go, ladies and gentlemen? Would your stop go here in red, or would your stop go up here in orange? Which one? Well, in this particular situation, your stop would go in red. It would simply go above the prior day's high. So in a bearish trend, very, very often, you can simply place your stop above the prior day's high. Now, if you did place your stop above here, I could get behind that as well, but that's a pretty significant risk. That's about $3. And this is really about a 1 to 1.5 risk reward ratio. So again, your goal, bottom line, worst case scenario is to do your best to try to get and go for a 1 to 2 risk to reward ratio. So here's the neckline. Here's the entry. The next day was the retest. The next day was a retest. You had 2 days of retesting. This day was actually a new black crow, right? It's a black candle that opens and closes below the prior day white candles close, and then the trade continues to go lower. So that's kind of an example of a double top. Now, let's talk about 3 continuation patterns. Ladies and gentlemen, what continuation patterns are? They're very small chart patterns. So double tops last around a month. Double bottoms last around a month. Continuation patterns usually last 2 to 8 days, sometimes 10. And they come in 3 variations. Now, as far as the name is concerned, I don't really care if we ever get the name correct or not. It doesn't really bother me. We could call a continuation pattern the mashed potato dance. It doesn't bother me what we call a continuation pattern as long as we can say, hey, this looks a heck of a lot like a continuation pattern. Now, there are 3 types. You have a stair step, you have a pinit, and you have a flag pattern. A stair step looks exactly like stepping stairs. So you go up, sideways, up, sideways, up, sideways, up, sideways. So you're looking for the stock to go up, sideways, just like that. Here's a stair step pattern right there. Now, one of the key components to any continuation pattern is a strong decline in volume. So we have to ask ourselves, ladies and gentlemen, did the volume decline in that stair step pattern? And the answer is yes, absolutely. It did decline in that stair step pattern. So how do you trade the stair step pattern? Well, you might be able to notice that there is a pretty decent little resistance price right here. Let me actually just take this line and move it up so you guys can see. So here's the resistance line right there. And I'm choosing that resistance based on the stop here and the stop here. Now, I realize that there were some peaks here and there were some peaks here, which were also targets. And those are also some locations that you could have sold. But I am simply saying that based on this stair step pattern, all right, stair steps, they totally just trade sideways for about 2 to 8 days. Once we got a breakout, once we got a nice white candle that made higher highs and higher lows and the volume increased, you could have said to yourself 2 things. Hey, in this situation, I'm either going to be bullish or simply not be bearish. And that's 2 huge components, right? If you're bullish, you could have made some nice coin on that particular trade, right? You would have really, really done quite well if you were bullish on the trade overall, taking the trade. So where would your stop have been placed? Well, your entry would have been right about here, $45, right? How would I have known to do 45? Well, simply a close above this resistance and a confirmed breakout of the stair step pattern would be good enough for me. So this giant white candle that closes above resistance with increasing volume and makes a higher high and a higher low, yeah, that's a confirmation. So there's your confirmation candle, and ladies and gentlemen, at this point you place your stop right here. You place your stop below the pattern and in the gap. So your entry would have been about $44.87. Your stop would have been approximately $44, almost right at it. And so that would have been, let's just call it an 83-cent stop value. So what I would love for you to do is you guys go ahead and tell me individually, based on an 83-cent stop value, how many shares you would have bought if your R was and or is 200. Go. How many shares of Verizon would you have bought if you had a $200 risk unit? 200 divided by 83 equals 240 shares. 240 shares. Okay, so if 83 cents is our stop value, what's a very, very simple way to say, all right, what is our target? Well, our target would be $1.66, which is 83 cents times 2, right? That's a 1-to-2 risk to reward ratio. So $1.66 plus 44.83 equals 46.49. So your target would have been right here, which is quite convenient because that's also near some resistance. Now, you could have taken off your entire position there, and or what I often recommend is taking half of your position at your 2R target and then just using a stop to follow the rest. So you're just kind of walking it up, so to speak. Okay? So let's go and look for some more continuation patterns. So there was the stair step, and I'm sure we can find a few more stair steps. Verizon really is kind of trading totally sideways right now. Let's hop over to Twitter and see if Twitter has any patterns. Twitter does, actually. So Twitter has a stair step pattern, so that's what I was looking for with stair steps. And notice right here, ladies and gentlemen, volume significantly declines. We had a very, very nice gap up. Stock trades, right? So we're making higher highs and higher lows, and then we get perfectly sideways for about 3 to 4 days. This is your entering candle right there, and your stop would have been placed right about there. Present day, as far as what I'm looking at on Twitter, we have some resistance right here, and this does appear to be stair step-ish. Only problem, I don't love it, the volume did not really decline. So it does trade sideways for sure, but it doesn't really decline in value or decline in volume. I would say this is a stair step pattern, right? Nice 2 to 3 day movement, trade sideways where the volume declines. Very, very nice. All right, so you guys kind of got an idea of the stair step. Very simple, very easy. Let's talk about the flag. Flag is a very interesting pattern. The flag is a counter trend move that also declines in volume. So a flag, ladies and gentlemen, would look something like this. Stock is going lower and lower and lower and lower and lower, and then trades up just like this. So it's a counter trend trade. So a bearish flag looks like this, and a bullish flag looks like this. So they are small counter trend moves, which allows the buyers and sellers to consolidate. So the sellers who are making money as the market goes down, they're selling, they're selling, they're selling, they're selling, they're selling. Okay, I want to start locking in some profit. How do they do that? By buying to close. That creates this little pattern right there. Now, ladies and gentlemen, did the volume decline? And the answer is yes, the volume did decline. So in this situation, when you're in a flag pattern, you're expecting it to continue lower. Well, this is a pretty bearish candle, right? Think about the sentiment of that candle. Let's zoom in for a moment so you guys can really see and understand the sentiment of that candle. This candle took out the entire previous day. So it opens up right here, trades down, and anyone who bought the prior day, creating the white candle, is now losing money. They are trapped. They're trapped. So they're losing money. So they, whoever they are, begin to sell to exit their losing position. So they sell, and it creates the stock to go down, which, as you guys know, you can make some money in a down move, right? So there's a flag pattern. It's kind of just an idea of how it looks. This is kind of a pinit, and I know it's a little bit of an early expose is the wrong word, but an early example of a pinit. But a pinit, ladies and gentlemen, is realistically, if it's a bearish pinit, the stock just it pinnets and then it continues lower. And then if it's a bullish pinit, it does the same thing. It just pinnets and then continues higher. So you really don't see a pinit oftentimes unless you draw them. You don't necessarily have to call that a pinit. You could even almost draw that as a stair step pattern. Watch, I'll show you. So there and there. It depends on how you draw the lines. Again, it doesn't matter to me what you call that, but could you understand that, hey, the volume declines, it rested, it allowed the buyers and sellers to consolidate. Ladies and gentlemen, is that a consolidation pattern and continuation pattern? The answer is yes. Right, you get a new black crow, really, really good gap down, very profitable day for me, day trading. You could almost call this a flag as well. So there's a bearish flag, volume does decline, and the trade continues lower and lower and lower. I was actually in this trade bearish until this day happened. Ladies and gentlemen, what candlestick pattern is that? And if you said that is a one white soldier, the answer to your question would be, or the answer to my question would be yes. That is a one white soldier candle pattern. So my favorite candlestick pattern of all time occurs pretty much at the all-time low on Twitter, beginning to form what looks like a kind of a long double bottom. What do you guys think? Do you think I got out of the trade? The answer is yes. I did exit the trade. And it was a good thing, right? I ended up getting back in later profitably. Or I'm sorry, getting in bullish later to make a profit on the trade. So yeah, there's kind of the stair step. There's the flag. Let's see if we can find a bullish flag. Some people might call this a bullish flag right here. I think it's a little big. Now, if you use this entire range and said that's a flag, maybe. But I often like flags to not move very much. I don't want them to be, giant movements on the stock. I want them to be small, cute movements, if you will. Let's see. I'm trying to think of a good one. Let's just hop over to my nemesis stock, SanDisk, and look what this has been doing recently. SanDisk, looking for flag patterns. Here's a stair step pattern right here. There's a stair step. There's a new white soldier. Here's also a stair step pattern. Look, I'm sure you guys probably see them. I only got two eyes, and there are hundreds of you. So if you guys see one, let me know. All right, looking for flags. I think I can see a face. The thing is, I don't want to force a flag. I want it to be an obvious, kind of a no-duh type of pattern. I could almost call this a flag. I could get behind that. So volume did decline. We were at that point making higher highs and higher lows. And we had a nice strong resistance right here that we were about to break through. So it was really, really pounding its head above that resistance. So once we got this really nice gap, then it was more bullish than bearish. But I would like to find a little bit better of a flag for you guys than that. Here's one. Okay. Perfect flag. Very, very nice. Can you guys see it? Let me know if you see it. It's kind of in the middle of the screen. I know it's a dead giveaway, but it's right in the middle of the screen. Let's see if you guys can see the flag. Yes, there it is right there. Very, very pretty flag. Or just trade sideways. Now, volume, granted, actually isn't that lower. So I wouldn't, now that I'm looking at the volume, call that the most perfect flag of all time. But you guys get the idea, right? So in a flag pattern, this is actually, this entire candlestick pattern you guys might recognize as a rest after battle, which it is, right? It's a rest after battle, but it's a very specific type of rest after battle. It's called a rising three. Rising three is just a rest after battle with three black candles right in the middle. So interesting to keep your eyes out for. But there it is. And you would take that trade bullish if we moved higher than the high of the third candle. But the flag pattern, bottom line, ladies and gentlemen, breaks out like this. Stock is going up, so I'll draw it on the screen, okay, like that. Then you get a little bit of a counter trend move like this. And then you enter with a nice white candle that preferably makes a higher high and a higher low, and or simply is a strong bullish candle, which again, in my opinion, that one would be a pretty nice strong bullish candle. And so again, you could take that trade bullish, and if you were still in a trade and you wanted to place your stop or move up your stop, the other thing I like about continuation patterns, ladies and gentlemen, is let's say that you were in this trade bullish from this gap, and you got in bullish somewhere right around there. And the trade was continuing, and the entire time you had your stop right here, and you're waiting to move it. You would move that stop once this candle was created. So you would take your stop, boop, 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 and drop it right there. So you move the stop once a continuation pattern breaks in the direction of your trend. So that's what I do like about continuation patterns, is that's why I really want to focus some time to teach you them, in regards to why you want to learn them. Here's another double bottom pattern right there. There's the entry. Here's another double bottom pattern right there, and there's the entry. Let's come up here and let's just look at what SanDisk is doing present day. Present day SanDisk. Well, there's definitely some strong support right there. We broke out of it, and now we're at a strong support here. So I would say if SanDisk makes and gets a close below 90.80, we will be more bearish than bullish. So you guys will get the privilege of seeing if that did in fact work out or not on SanDisk. So I didn't talk about the pinit that much, but I think you guys kind of got the idea of what the pinit pattern is as well. Pinit pattern is just a nice little small, very, very small triangulation looking pattern. It's not a triangle. It's smaller than a triangle. We'll be talking about triangles a little bit later, apparently. Here is a pinit. Pinit is when you make higher lows and lower highs, but it's tiny. Again, it's not a very, very big move. And the way you tell, decline in volume, and the way you enter is with an increase in volume and when the chart and when the stock makes higher highs and higher lows if you're in a bullish pinit. A bearish pinit would be Baidu as an example. Let's hop over to here. And here's a bearish pinit. So you can see we were trading sideways. Here's a nice little support. We had a gap down, stock gaps, and we make higher lows. We make lower highs. We form a little bit of a pinit. Ladies and gentlemen, is that the confirmation candle on Baidu? Yes or no? And the answer is yes, it is the confirmation candle. Why? Because it makes a lower low and a lower high. So your stop in that situation would be right about there. Before we go, let me show you my favorite pinit pattern of all time. This is on Google. Now, I know it's kind of nerdy for me to have a favorite pinit pattern of all time, but it was a really, really good trade. So the pinit pattern, one of my favorites, probably the favorite of all time, was on Google. Now, we actually had a few continuation patterns in this sequence, and I'll kind of show them to you. But down here, we had an accumulation phase, right? We trade sideways for about a month, month and a half, and we began to form, and I'll give you a sneak peek into this pattern. It's kind of called a triple bottom. It's just a big, big double bottom, or an accumulation phase, or a very, very, very small channel, however you want to call it. But it was definitely trading sideways, and I'm pretty sure any and all of you would have been able to see that. Now, what forms next? Can you guys tell me? What is the next thing to form? And the answer is a pinit pattern. Yes, the answer is indeed a pinit. So let's see if we can draw it. Let's draw the pinit. Here it goes. Higher lows, relative highs. Now, the reason this was one of my favorite pinits of all time is because I did trade it, number one. Number two, the volume declined quite beautifully. You guys can see that there was a huge amount of volume coming into the pinit, and at the end of the pinit was pretty much abysmal. There was also very, very, almost no short-term resistance. So you guys can see if I draw a resistance right here, you'll notice that this was a very, very good resistance line. And once and if we broke out of that resistance, kind of like we did last time, we were kind of guaranteed more or less to at least go a little bit higher. So this is absolutely the breakout candle. And not only does it break out, but it also gaps, which is fascinating. Has a really strong gap. And then the stock starts trading sideways into a stair-step pattern. Volume declines. We break out higher in the stair-step pattern. And then we get into a sideways movement. Another stair-step pattern right there. You might be able to call this a pretty large flag into a very, very cute 2-day stair-step pattern. And then we just start getting into some congestion distribution phases. So I'll draw the phases for you one more time on Google. Here's accumulation, here's the polar participation, and here's the distribution phase. And to top off the distribution phase, ladies and gentlemen and boys and girls of the stock market jury, what type of candlestick pattern is that right there at the top? And that is a evening star reversal. In which case, your entry could have been right there, your stop could have been right there, and you could have either A, gone bearish, or B, simply not have gone bullish. And from that situation, stock trades down, and then maybe you could have gone bullish once you saw that beautiful morning star reversal. So ladies and gentlemen, hopefully this was beneficial and kind of opened your eyes a little bit more to what's out there. Really the best way to get experience and hands-on experience finding chart patterns is just to go out and try to find them. Track them down, see what you're looking for, right? Draw them, make flashcards, if you will, and pull out your favorite stock, be it Apple or Facebook or Twitter or gold or silver, and just go look through some chart patterns. I mean, bottom line, ladies and gentlemen, you're not going to be wrong. Just try it. Try out your hands, post some charts. You're welcome to post them on the Facebook group page. And I'll be happy to respond to you and let you know if I think, in my opinion, it is a stair step or pinit or a double bottom or double top pattern. But these patterns, ladies and gentlemen, simply give us insight into the potential for the future movement of the stock price, because it does show the sentiment of traders and what they're doing, and more importantly, why they are doing it. And that is what we're going to be talking about more specifically in Class 4 of Section 2, entitled Trapping, which really is, and I can assure you, one of the most revolutionary classes ever taught as it relates to gapping, and absolutely can almost guarantee that you have a giant, magnificent aha as it relates to your trading. Ladies and gentlemen, thank you so much for tuning in. I really appreciate it. You guys who are watching live, you're absolutely rock stars. Thank you so much for showing up. Students from around the world, go tell your friends, your family. I'll say it every video, every class that we do, because our mission statement is to enrich lives. And we're giving you this information absolutely for free, so that way you'll be able to pass it along, tell your friends, tell your family, bring them to real life trading, have them meet some real life professional traders, and give them the opportunity that they can achieve their financial freedom by being able to finally discern what the market is doing and what type of opportunities lie ahead. Ladies and gentlemen, have a great day. Remember, love life, live it, trade it. Welcome to real life trading.